Good morning, good afternoon, good evening, wherever you are in the world. It's our pleasure to welcome you to episode 13 of our Signature FX Technical Analysis series. This episode is produced on the 22nd of April 2018 and is a follow-up to our episode 12 video on the biggest cryptocurrency in the universe. You know what I'm talking about. Bitcoin. Please note that this is not financial advice. Make sure to conduct your own technical analysis and/or seek your own independent financial advisor before investing. Signature FX is yours truly, Marley Holiday and Andrew Ibrahim, and for those of you who are new to our videos, we always like to kick it off with a powerful quote. Our episode 13 quote comes from Robert Arnott and goes like this. In investing, what is comfortable is rarely profitable. Doing what is comfortable is always the easier option. It's stress-free, it takes little or no effort, but to be successful you have to do what is challenging, what is unique, and what is innovative. Doing what is comfortable is closely tied to the fear of the unknown. The fear of doing something new, doing something different from your friends, family, and coworkers. There is also a human tendency to fear missing out. This is colloquially referred to as FOMO. It's important to identify when you are experiencing the fear of missing out. And the quote puts it perfectly, that what is comfortable is rarely profitable. If doing what is comfortable were profitable, there would be a lot more billionaires in the world, and anybody could be a successful trader, which we all know is not the case. In order to make money, you're going to have to do things that are uncomfortable. Now, I'm not saying that you're going to have to do anything illegal or even unethical. But what I am saying is that at times, you're going to have to step out of your comfort zone to realize significant gains in the markets. Do you know the boundaries of your comfort zone? And sometimes do you practice stepping out in small doses? As much as you need to know the markets, you also need to know yourself. For anybody who hasn't been watching the price of Bitcoin, the price went parabolic all the way up to 20,000 at the end of last year, and then this year dropped down to as low as 6,420 on the 1st of April 2018, which just happened to be April Fool's Day. When prices were hovering around 6,420 on the 1st of April, there were a lot of people who were selling and shorting Bitcoin left, right, and center. Everybody was on one side of the boat, meaning every trader and their grandmother was selling Bitcoin. Now, what happens when everyone is on one side of the boat? The boat tips over and capsizes. It had to reverse at some point. In the big picture, institutional investors who have seen the price of Bitcoin at 20,000 and now see it at around 8,500 are thinking, this is a great deal. They are only just right now looking at prices to start picking up Bitcoin on the cheap. And the purpose of this video is to find out where institutional investors, hedge funds, and the big money traders are buying back in. It will only be at these low prices that the hedge funds and the institutional investors are going to be even considering entering positions. And they're not risking 50% of their accounts on these trades. They're putting 2% in here, a little 2% there. In a way, they're planting seeds that will eventually grow into plants, into trees, and into forests. But right now is the time to be strategic. I like to buy in very small chunks, and this also lowers my risk and allows me to get the lowest possible price. I enter into my positions with multiple orders, and this produces an average in. I don't like to say this is the absolute low, so I'm gonna buy with all of my money right here. No, I use my trading plan and conduct my technical analysis, and I place small multiple orders. For example, my averaging in Project Afro, Project Bermuda, and Project Crypto on the Bitcoin drop lower. Two things that I've learned in my many years of trading are: number one, the markets always seem to find a way to surprise the greatest number of people. For example, if the greatest percentage of people in the markets think that Bitcoin will go up and continue to go up, then surprisingly, the price will always go down. Number two, the markets also seek out the stop losses. And I like to use the phrase hunt for stop losses. The markets always find the most vulnerable stop losses to trigger, and they use those orders for liquidity to reverse the price. For example, if prices are slowly going higher and there's a stop hunt, the stop hunt will push the price lower briefly just enough to trigger the stop losses below the market price, and then continue higher. What in effect happens is that the stop loss orders, which are sell orders, usually placed by newbie traders, they are close to the market, and they're usually where the newbie traders are willing to get out or want to get out if the price drops. When prices do drop, these stop losses are all triggered and the sell orders are bought up by savvy investors, and this causes the price to continue higher. And now, without further ado, it's our pleasure to present to you our deep dive technical analysis into Bitcoin. I'm going to start off by saying that I am a Bitcoin bull, which means I'm buying Bitcoin for the long term. I also believe that we're going to be seeing some all-time highs in 2018, and that Bitcoin will ultimately be rallying for the next months and years to come. However, having said that, in the short term, I've spent hours and days analyzing these markets, and I have a view that we're due to see a drop lower before we see a more substantial rise. If you haven't seen our episode 12 video recorded on the 20th of March 2018, I highly recommend that you watch that video and promise that this video will make more sense once you do. In any event, in our episode 12 video, we had 3 traps set: Project Afro, which was 5% of our account at $7,000, Project Bermuda, 5% of our account at $6,000, and Project Crypto, 5% of our account at $5,000. I am so happy to inform you that Project Afro was triggered on the 29th of March in the year of our Lord 2018, and we've now officially taken 5% of our capital and put it into Bitcoin. We purchased Bitcoin at $7,000 on the 29th of March, and it's a great feeling. We are so happy to now be in the markets. There's a low risk at $7,000. Right now we're up. It's quite substantially on that position, and we have a very small allocation allocated to Bitcoin at this present time. This is an example of how doing something uncomfortable, which especially 3, 4, 5 years ago, I would have been very uncomfortable placing a buy limit order at $7,000 when the market price was hovering around $8,000 at the time. But it's paid off, and we can see from the previous videos, episode 12, episode 11, that those techniques and those strategies were maybe unconventional to some people or new to some people, but those uncomfortable actions have now paid off, and we're seeing profits as a result. Quite some dramatic moves over the last month with the #1 crypto, Bitcoin. With it being so volatile, it's certainly kept us on our toes, and it continues to keep us trying to update our technical analysis. As we predicted, price breached the monthly low with a move to the downside of 6,420, and while the price remained below 7,500, we were seeing a potential movement of even lower lows of around 5,900 to 4,900. As you were able to see from our analysis and Instagram posts, even though Bitcoin was moving to the downside, our analysis on the big picture has always been bullish. After a very slow and low start to the new financial year, Bitcoin has finally started a little bit of a bull run and is currently trading around 8,900, just below $9,000. The move to the downside at the start of 2018 certainly took out many retail traders, and their stop losses have been triggered. While conversely, crypto miners and hodlers at Signature FX were wishing for a more upside move to the bullish side. Based on our analysis, the recent low at around $6,420 should hold up as support in the short term. We are expecting to see Bitcoin move up to around $9,200 in the next day or so. Once prices do reach $9,200, we have identified 3 scenarios that are most likely to happen with the price of Bitcoin. We are calling these scenarios the 3 scenarios of May 2018. Scenario number 1. We're calling this scenario the down slightly and then up. So what we were saying earlier is this continuation is probably going to go as high as 9,200, 9,500, and then we're going to look for a down slightly move. Okay, as we discussed earlier, market seemed to find a way to surprise the most amount of people. And there were a lot of people who were very, very bearish, very much sell-minded down at these lows, who got surprised and prices moved up. There are also people who bought at 6,400 and are now looking to try and sell some of that profit on this move higher. So scenario number one is down slightly. When we say slightly, we're thinking somewhere around this 7,000 to 7,000 to 8,000 range. I know it's a big range, but we're using our technical analysis to say essentially that there needs to be a push down lower to try and scare off a lot of these latecomers who are chasing the markets on this what we're calling a bull inducement. So scenario one is for a drop lower. Once we hit around 9,200, 9,500, we're looking for a drop lower to around 7,000 to 8,000. Scenario number two. This scenario is a little bit more contrarian, and some may argue it's a bit more dramatic, but we're looking for a drop more through these Fibonacci levels that would be in here to test these lows again. So if we were to say, okay, prices are going to dribble up a bit higher, and let me mention this now while I'm thinking about it, that 9,000 is a psychological level, and there will be a lot of orders placed at 9,000. As you can see, back in March, end of March, there was a test of the 9,000 and it kind of held up as resistance. So we do anticipate that there could be a bit of a follow through higher, and that's why we're using the numbers 9,200 and or 9,500 as a range. Once we do see a trigger here, a pair of potential bear stop losses, we're looking for the price to come right back down here and test these lows again. As you know, as you are aware, we did purchase our Project Afro, which we're very proud of, at $7,000, and we'll show you that in the next chart. But these lows again could cause prices to drop back down to this level, and we're a little bit more inclined to this scenario because of the volatility that we've seen in Bitcoin, and because of the drastic movements. There were a lot of buyers who took a risk down here at these lows of 6,400 and who have been in profit the last couple weeks. So they're looking to kind of maybe shave back some of those profits and realize some of those gains that they've experienced, which will cause the price to drop back down as well. And also, the reason why we have this view is because we ultimately are bullish long term on Bitcoin, and we are looking for the lowest possible risk. So this is a lot less risky than what we were looking at in scenario 2, where we were looking to get in a higher range between 7,000, well, basically between 8,000 and 7,000. For scenario 1, we're looking at more along the lines of 7,000 to maybe 6,500 for scenario number 2. Scenario number 3. Scenario number 3 is probably the least likely to happen, but it's also probably the thing that most people will want to happen, and that is simply for the price to go to the moon, up and away. We do have to kind of plan for that and anticipate that as a possibility. If that is the case, we have still bought 5% of our account down here at $7,000 on the 29th of March. So we bought in here. So we've bought 5% of our capital in Bitcoin. And that's in profit right now, pretty comfortable profit. So if the price does continue up, we will reassess the situation as we continue higher. If scenario 3 is in fact the route that the price of Bitcoin does take. Like I said, least likely to happen, but probably most of you who are watching this video may probably want this to happen the most. So those are the three scenarios that we've kind of split out into three possible movements. We got the first one was just kind of like a small little drop down somewhere in between 7,000 and 8,000, just to kind of clear out some of these stop losses and clear out some of the weak hands, some of the people who are unsure about what Bitcoin's going to do. Then we also had scenario 2, which we're looking at a more dramatic drop. It could even go as low as our project Bermuda, and our project Bermuda was in at $6,000. Project Afro has been triggered, and we're still going to leave our project Bermuda at $6,000 and our project Crypto at $5,000. Okay, so those are all going to be kind of encapsulated within scenario number 2, which we think is the most likely to happen. And then we have scenario 3, which is prices just skyrocket and go higher. Obviously, as a result of scenario 1, we're looking at a small drop to between 7,000 and 8,000, and then we'll see a continuation higher. With scenario 2, we'll see a bigger drop down to potentially Project Bermuda and Project Crypto, and then we'll see a nice move higher after that as well. So all of these are ending in a bullish reversal, except for scenario 3, which is prices continue up from here. These are our 3 scenarios for the month of May. We're going to finish off the technical analysis with a quick view at the big picture chart that we started way back when we first started looking at Bitcoin. And our previous video on episode 12 was recorded on March 20th. If my memory serves me correctly, and we'll just have a look at what happened with the price. Prices ended up going pretty well down, and we would have gotten triggered, or we did. We got a nice buy order here at 7,000. This was when it happened. So happy on March 29th when this green box, which is Project Afro, got triggered. Price went down lower, so we could have been a little bit more conservative, but we're happy with 7,000 as a buy, and being in the price. And look what happened after. We got a nice move upward, and now we're sitting pretty at just under $9,000 now. So you kind of know the 3 scenarios that we're considering. We still have, for scenario 2, we have these 2 Project Bermuda at $6,000, which is a 5% buy of our account. And then we have Project Crypto, which is at $5,000, and that's another 5% of our account. That's still in place. We're not canceling these 2. We do think that if there is a move lower, that we want to be prepared for it. However, if this does turn into a scenario 1 situation where we only see prices drop slightly, just below, maybe just below 8,500 or just below 8,000, then we're going to reassess the situation, and potentially we may bring up, raise the price of the buy limit for Project Bermuda a little higher, and in turn maybe look at raising the buy limit order for Project Crypto also a little bit higher as prices go higher. In the event that prices go higher, and we're looking at a scenario 1 situation. I'm so happy that this got triggered, and I want to tie this back into the quote at the beginning of the video, which is sometimes uncomfortable things result in great rewards. So don't think just because you're doing something uncomfortable, or in the inverse, just because you're doing something comfortable, that you will be rewarded. It is the investor who is doing something that is uncomfortable that will be the one who is successful. To summarize this video, sometimes you have to do things that are uncomfortable in order to be successful. The same in trading as it is in real life. Don't let the fear of losing out cloud your judgment and cause you to chase the price. Usually, what is uncomfortable, in other words, waiting for a dip, will distinguish the losing traders from the great traders. I am a long-term Bitcoin buyer. But in order to buy, I have to be satisfied that I'm buying with the lowest risk to my portfolio, and I'm buying at the lowest price I can get. In the short term, I do see Bitcoin taking another dip lower, and this is where I'm willing to buy a little bit more. Once we eventually do break above 10,000, we don't anticipate returning back below that level, and therefore we'll be expecting bullish moves for the remainder of 2018. And at that point, as they say, to the moon. Thanks so much for watching, and don't forget to like the video and don't forget to subscribe. Click the bell symbol next to the subscribe to receive alerts when we post new videos. Please take a moment to write us a comment, share this video with family and friends, and follow us on social media. All of our social media links are conveniently provided for you in the description. We'd like to take a quick poll. If you'd like for us to produce a podcast, please include that in your comment, or just email us at info@signaturefxa.com. On that note, we are so grateful for your time and attention, and until next time, happy trading.